Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Lomiko metal stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a microcap company, 6 million market cap. They're trading at 1.5 cents per share, and they have 400 million shares outstanding. This ticker trades on the TSX Venture. So these numbers are in Canadian dollars. TSX Venture is like the pink sheets in Canada. Lomiko is a Canadian pre-revenue metals and mining company. It is actively developing graphite. Graphite is used in pencils, lubricants, polishes, brushes for electric motors, and solar panels. So it's a really important metal for the EV community. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They are pre-revenue, so they have negative free cash flow each year. Same thing with their net income, it's negative each year. So not much info in the financial section. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 23 million. We discounted the numbers back to today using the weighted average cost of capital. We get a value of the company of $6 million. We divide that by 400 million shares. And we get a calculated stock price of 1.5 cents. So I didn't really value this company. I don't have any information. It would be a total guess. I'm just showing you what their future free cash flows we need to be to justify the current stock price. So if they can hit 2 million of free cash flow by 2027, then they're valued appropriately at 6 million Canadian dollars. But there's probably a 95% chance the company will go out of business before making any money. And there's a 1 or 2% chance the stock will 100x. Hopefully you'll get more information out of this video when we go through their financials and reporting. Let's take a look at their annual financials. This is as of year-end 7/31/2023. We'll start with their income statement. They show us 2022 and 2023. Usually it starts with revenue, but there's no revenue, so there's only expenses. 2.4 million in 2023, down from 3.9 million. Everything is in Canadian dollars. Their biggest expense is payroll, 700,000, then stock-based compensation, $500,000, advertising, 230,000, then your insurance, consulting fees, professional fees, that could be legal fees, regulatory and filing fees. They had a net loss of 2 million for the year. Last year, a loss of 3.4 million. They are adding shares, 261 million last year, 327 million this year. Let's look at their balance sheet, see if they have enough cash to get through the next year. 2.1 million of cash, 100,000 of receivables. So their current assets, 2.3 million. Cash is down, it was 3.8 million last year, and now it's 2.1 million. They have a lot of non-current assets, about 12 million. These are the mines or properties they own where they're looking to extract graphite. They have 570,000 of liabilities. Accounts payable, 370,000. That's how much money they owe others. Assets minus liabilities equals equity, 14 million of equity. They raised 40 million from selling their business, and they lost 30 million from running their business. Let's take a look at the statement of cash flows. They have negative 1.8 million of operating cash flow. Last year, negative 2.4 million. A lot of their expenses are in their investing section, 2.6 million of CapEx. These are investments in property, plant, and equipment. In their financing section, they raised 1.3 million from the issuance of flow-through shares and 1.6 million from the issuance of shares. A flow-through share is a type of common share that allows the purchaser to claim a tax deduction equal to the entire amount invested. So the person buying the stock from this company can get a total tax write-off. A flow-through share allows Lomiko to transfer certain expenses onto the investor. So the investor doesn't actually pay the expenses, but they do have to deduct it from their cost basis on their investment. Here's a little known fact. Flow-through shares contribute 65% of the funds raised on Canadian stock exchanges. In 2021, Canadian companies raised 1.6 billion from flow-through shares. Let's go back to the statement of cash flows. So the way they raise their money is through the financing section. They raised $2.8 million in 2023, $4.2 million in 2022. They explained their nature of operations. Lomiko is engaged in the acquisition, exploration, and development of resource properties. They were incorporated in 1987, so a long time ago. I thought they were a newer company. They're listed on the TSX Venture. They're also listed in the US if you want to invest in this stock, ticker LMR.V, as well as the Frankfurt Exchange in Germany. That ticker is DHHC. Let me know in the comments if you trade on the Frankfurt Exchange. That's one of the largest stock exchanges in the world. It's probably top 5. Here's a breakdown of their 4 exploration assets. La Loutre, hope I'm saying that right, is their biggest, almost 10 million. The total of all 4 is 11.8 million. Here's a breakdown of La Loutre. Their EV deposits, 24,000 tons. Battery deposits, 40,000. And here's the percent graphite. That's what they're really looking for, is the graphite. 1,400,000 tons, 1,600,000 tons. Here's the CapEx spend at La Loutre. They spent almost $8 million. A lot of drilling in this quarter, 850,000. Only 30,000 the following quarter. None the most recent quarter. Sampling mapping, 70,000, 28,000, 30,000. Consulting, site visits, 36,000, 30,000, 30,000, and 44,000. A big expense on feasibility study, 113,000. A feasibility study is a deep analysis to determine the likelihood of pulling a certain commodity from a location. A big expense in metallurgy, 120,000, also 114,000 in the latest quarter. Metallurgy is the process to extract metals. Their Burier lithium property, they spent 750,000. That was just to acquire the property. Then the geology and exploration, they spent 877,000. In the Laurentides region, they spent only 21,000, but nearly 300,000 in mapping, sampling, and exploration. The Carmen property cost them 175,000. They acquired that in May 2023, and they only spent $5,000 on reporting. So that's in the early stages. They invest in other companies. In May 2018, they purchased 200 shares of Prometheus cryptocurrency mining. Let's look at a company on Simply Wall Street. Its last price was 2 cents, 6 million market cap, up 33% in the past week, down 33% in the past year. Let's see what they say about the company. Lomiko engages in the acquisition, exploration, and development of resource properties in Canada. It explores graphite and lithium deposits. Their flagship project is its 100% owned La Loutre graphite property located in the Laurentian region of Quebec. They were formerly known as Lomiko Resources. They changed their name to Lomiko Metals in 2008. They were incorporated in 1987, based in Surrey, Canada. Here's their historical stock price. So it does look like they started trading in 1990, but this was a totally different company back then, so it's hard to compare them to now. If you look at the stock in the past 5 years, it did get pretty high, up to 26 cents in 2021. So it's down over 99% since then. They completed phase 2 of their pouch cell battery testing of its La Loutre graphite material with Polaris Battery Labs. So they haven't generated revenue, but they're getting closer. Here's an article recently. The company has less than a year of cash runway based on its current free cash flow trend. Free cash flow negative 2.5 million. So to get through 2024, they're going to have to issue more shares. In January, they announced excellent results from the half-cell coin battery testing with Polaris, as well as suitability as battery anode material. Anytime a company announces something like this, the stock usually goes up. Simply Wall Street does not value this stock. There are no analysts that value this stock. This red line on the bottom is their debt, so it looks like they have pretty much no debt. And they do have positive equity, that's the blue line. And this green line is their cash. Their cash is getting kind of low. Most of the equity is the exploration assets they own. The CEO pays himself $250,000, and she's been CEO for 2.5 years. One big insider sell in the past year, and one buy. 95% of the company is owned by the general public and 4% by insiders. So it doesn't look like they have any institutional ownership. The CEO is the biggest shareholder. Her value of the company is $88,000. Maybe she could buy a nice car. And then probably a lot of board members own the stock as well. And the ticker trades on the TSX Venture, the Deutsche Börse, the Pink Sheets, and the London Stock Exchange. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.